Welcome back to Everything Money. This is the fourth installment from our awesome interview with the famous value investor, Mohnish Pabrai. We talked about building and selling his business. We talked about the mindset of a value investor, and we talked about his thoughts on China, Alibaba, and Tencent, all prior to this video. So make sure you go check those out when you're done. But in this video, we talk about Tesla, cryptocurrencies, and the current investing environment that we're all in, which is with its pitfalls and pros. You guys got to see this. So stay tuned for the finale of this incredible interview with Mohnish Pabrai. Here you go.
So we've done like 1,100 videos on our channel, and it's getting to the point where some comments are, here's another video of Paul telling us that this company is overpriced and it's a no buy. And so you talk about extreme patience. I'm learning this myself in real time, but what are your thoughts on the current environment of these altcoins and pre-revenue companies where a lot of people are not exhibiting a lot of patience before they're putting up their money and investing in these things? What do you think about this?
So I think in the 1920s, we had a major bubble in automobile companies. So any company with the name motor in it would go crazy. And we had hundreds of auto companies in the US because all these bubbles have a kernel of truth. And the kernel of truth at that time was that the horse is history. That was true. Okay, the horse was history and automobiles were going to be huge. And that was also true. So there's always a kernel of truth around which a bubble gets built. But eventually, 99% of those businesses turned out to be bad investments for investors. Okay, it was terrible. Then in the 1960s, early 60s, there was this tronics boom. So if you had a company with the name ended in tronics, okay, it got spectacular valuation because it was all about this microelectronics and transistors and how that was going to transform stuff. And that was also true. I mean, semiconductors and all of that have transformed our lives beyond belief. But 99% of the businesses went bankrupt. They don't exist, okay? Then in 2000, it was .com, right? Anything .com. Again, a great kernel of truth because it was truly transformative. And we truly had something revolutionary and it has changed. I mean, without the iPhone, you don't have Uber. Okay, the whole Uber and Airbnb and all these ecosystems or DoorDash, they cannot exist without the iPhone. The iPhone is basically a supercomputer in your hand. Right. Okay, so that enabled so many other industries. But in the year 2000, again, the .com boom, there was a core kernel of truth that, yes, technology is huge. But again, 99% of the businesses went away, right? And now we have crypto, right? So
and EV.
Yeah.
And EV.
Yeah. And so the thing with the crypto end of things is that there's new coins and new currencies being created every hour.
Yes.
Right? I mean, it's a frenzy because everyone thinks, hey, I can create my own and whatever else, right? And I remember that, I used to go every year to the Harvard Business School campus for a week. I was doing executive ed with them. And we would meet the MBA students for one night for dinner. Wednesday night, there were a bunch of YPO and the MBAs, we went out for dinner. And every year, the MBA students were very polite because they knew that we were an industry, we could give them jobs. They were very polite and, on best behavior and whatever else and passing you their resume and all of that, right? In 1999, in early 2000, this was in February 2000, I remember when I was on the Harvard campus, the MBAs weren't even interested in coming to dinner. Okay, like it was hard. Their professors put a lot of pressure on them saying, listen, you signed up for this thing. You don't show up, I will take it out elsewhere on you. So the arms were twisted to come for dinner. And at dinner, they told us, listen, man, all of you guys, a bunch of dinosaurs, okay? In about 6 months, my net worth is going to be 5x what your net worth is. I got this startup. I got the VCs. I'm going to disrupt the chemical industry. I'm going to disrupt the thrash industry. I'm going to disrupt the pets industry. And I'm going to do this and that, whatever else. And when we went back in 2001, things had gone back to normal.
Yep.
They were very polite and they were giving you a resume and all of that. Okay.
This is fantastic.
So that was the bubble. In 2000, you just saw that bubble where they pretty much were giving you the middle finger, telling you that you are a total idiot.
Yep.
And that's the way it is. And so I think that crypto, I think last time I was seeing it's the total value across all of them is more than like 3 trillion. That 3 trillion, in my opinion, will disappear to nothing. And it's not that big because global wealth is about 500 trillion. But the 3 trillion is concentrated and it's in it will hurt a lot of people. I mean, if you take all the crypto to zero, that hurts a lot of people.
Yes.
And the other thing that is, Charlie has a different view on this. I think he said recently that the current bubble is bigger than the .com bubble. And I actually thought the .com bubble was a lot bigger than the current bubble.
In what regards did you say that? Because explain to me why you think it was bigger and in what way?
The current bubble is, for the most part, limited to crypto and limited to maybe at the outer end 20 stocks. Okay, so you definitely have a bubble with GameStop, with AMC, and you may have a bubble with stocks like Tesla. Okay, Tesla.
So you don't think like a company like Microsoft, which is selling for 35 times?
No.
Really?
So Microsoft. So the thing is that in a low interest rate environment, a business like Microsoft, you could justify 50 multiple.
But that assumes that low interest rate stays for how long?
So what I'm trying to say is that a business like Microsoft, first of all, it's an exceptional business because it's got recurring revenue, and he shifted everything to subscription.
Yeah. Yep.
Subscription has given a big tailwind to Microsoft. Satya's done some great execution. To me, it is not clear. Microsoft is not an investment I'm willing to make.
Okay,
Okay.
I shouldn't have said bubble when I said
that. But what I would say is that it's not obvious to me that it's overpriced. Okay. What is obvious to me is that AMC is overpriced.
Right.
It's obvious to me GameStop is overpriced. And it's obvious to me all the crypto is overpriced.
And Tesla.
Right. Well, Tesla again, Elon just got named Man of the Year by Time. He is a very unusual person. So I'll just tell you something, a little bit about the auto industry, just for the Tesla fans who are looking for some fodder. And I don't know, I hate giving them fodder.
You're about ready to, though.
But they'll be in the comments.
But maybe they'll just take this portion of the video and play it. So I was invested for a long time in the auto industry. I studied the auto industry. We did really well with the Fiat Chrysler investment. If you look at a business like Fiat Chrysler, they were making about 5 million cars a year.
Yeah.
Okay. 4 million of those cars didn't matter because the margins on those were less than $1,000 per car. They were, basically hyper competitive marketplaces and they had no margins or anything. The area that they made a lot of money was Ram trucks and Jeeps. Okay. And on the luxury end. So if you look at the truck business, the Ram truck business or the Ford 150, whatever, very simply, if you just say that the company is making $10,000 per truck, for example, which they can make because it's a very protected market and great brands. And let's say, for argument's sake, they're making 1 million trucks. I mean, they're making less than that, but some of them are making 1 million. Let's say Ford is making more than 1 million trucks a year. 1 million trucks a year at 10,000 is 10 billion in operating margin. Okay. And that's a good business. And even though it's got CapEx and all that, it's a good business. And if it's growing a lot, you could justify a 20, 30, even 40 multiple on that. So you could say it could be worth 100 to 400 billion. Okay. Tesla is now has already produced 1 million cars in a year. And Elon is nowhere near done. Now, he doesn't make 10,000 per car.
Mm-hmm.
He doesn't even make 5,000 per car.
No.
But what is possible with Tesla is that at the end point that Tesla gets to, they could easily be making 5 or 10 million cars a year. Okay? And they could easily have at least a couple of million of those cars with at least $10,000 margins. That is within the realm of possibilities. And the other thing about Elon is he'll go into businesses we can't even think about. It's like my turkey guy. I was thinking about what else did he come up with. So the thing with Elon is, what else does he put into Tesla? Now the nature of this bubble with Tesla is that I was talking to some doctor in New Orleans, and I played dumb. He was just all into Tesla, all his money, everything's in Tesla, right? And he's telling me about all the great things about SpaceX. And he thinks everything SpaceX is inside Tesla.
Oh boy.
Okay. And then he's telling me about the Hyperloop. Okay. And everything Hyperloop is inside Tesla.
Boy. Yeah.
Okay. So what I'm saying is that the nature of the bubbles is people don't go into the details. Right. And they just say, okay, everything Elon is everything Tesla.
And it's not. And it's not.
And they say, look, he will go, SpaceX has a business, Starlink, which will do satellite-based cell phones, right? Starlinks could disrupt the cellular business. It's not within Tesla, it's within SpaceX. And Charlie was telling me he thinks SpaceX is worth more than Tesla. SpaceX is actually probably worth a lot more than Tesla. So
intrinsically or market cap currently?
Well, it's a private business. It's not valued, But I would just say that they are running circles around everybody else. Okay, they've run circles. I mean, Boeing cannot put 3 people into the space station. Shame on Boeing.
Yeah.
Okay, after being in the space business for all these years, you can't put 3 people in a space station. Is ridiculous.
Right.
Well,
okay, and a startup company, private startup company, does that routinely now. It's amazing.
Running circles around NASA.
But what people are going to hear from your statement, this is why I asked that question. What people are going to hear from your statement is Tesla's $1 trillion, SpaceX should be $2 trillion. My thesis is Tesla's a phenomenal company.
Yeah.
But what does it have to do, number of cars and amount per car, to justify a $1 trillion
what I'm saying is,
value?
just like with Microsoft, we cannot tell that Microsoft is overvalued or undervalued where it is. It's difficult to tell. In Buffett terms, it goes in a too hard pile. Right? It's something it's for entertainment. It's not for investing.
Mm-hmm.
Tesla also goes in a too hard pile because there are cases that you can build on Tesla which would make $1 trillion look low.
Yes.
And there are cases that you can build on Tesla will make the $1 trillion look too high.
Yes.
And the same with SpaceX. There are different, space is there's so much open area here that, Bezos makes the statement that we will visit Earth like we visit Yellowstone. That's so far out,
Yeah.
And I'm basically saying that we won't be living on Earth, in effect.
Right.
Yeah, Paul's buying real estate on the moon.
Yeah. Yeah, Mexico, that's so 20th century.
Yeah.
We got to
That's
go
all
beyond.
fuddy-duddies.
All investments, I always say on the channel, guys, we don't know the future.
Yeah.
And I get what you're saying. And I'm not trying to harp on this. What I'm trying to sit there and say is, you're right. It is too hard to tell. But at the same point, it's also numbers. I look at it and say, okay, let's project these growth. I always tell people the hard Tesla bulls. All right, give me your assumptions.
Yeah.
30% revenue growth in the next 10 years. Okay, what does that make Tesla in terms of a car company? Great. Give me a margin. Great. That means at current market cap today, it's still selling for 30 times 10 years PE. Does that seem reasonable to you? Yes. Great. Then if you buy it today, you're going to break even in 10 years if they hit all your projections.
Yeah.
And that's where I sit there and say, to me, that's immediately overpriced.
Yeah, I think Tesla to me falls in a too hard pile. Elon is unpredictable in many different ways, and he can pull many. What he's accomplished is incredible. He's really accomplished a lot. I think the US is a big winner. It never spent on his education. Mm-hmm. He was not born here. We got all the fruits. Yeah. The immigration story with the US is fantastic. So I think Tesla is in many ways a great, remarkable story. The other thing I would also say to give Tesla credit where it's due is the rest of the pack has had, I mean, the Model S came out, 10 years ago? How far?
2012, I believe
like
it was.
8-9 years ago, right? None of them have put out a car that matches the 2012 Model S.
100%
And the
correct.
reason they have not been able to put that out is because they are bad at software.
Yeah.
And the car companies, the legacy car companies, will always struggle with software. Okay, so the thing is, there's a gap between Tesla and the others. It always looks like the others are coming, but they're always behind.
Yeah.
Right. And so it is not inconceivable that in the long run, Tesla ends up with 50+% market share. In the very long run, we may end up with most of the auto industry being electric. And we may end up with one or two companies owning 30, 40, 50% market share.
But to me, and I'll say this to everybody out there, if that's your reason for investing in Tesla, that's a lot of what ifs happening.
Yeah.
And that's where so then my next question is, what's the difference between too hard and overpriced?
Right.
That's my question to you. Like, what is the difference between, like, to me, Tesla isn't just too hard. It is overpriced because for it to justify.
See, the thing in the investing business is there are no called strikes. It makes no difference if we are wrong on Tesla if we never invest in it.
Correct.
Okay. I am wrong on a lot of stuff that I never
So
invest
am I.
in. Okay. It's just par for the course. Okay. Everything Sequoia Fund invests in a VC format, I would probably reject because it would make no sense to me.
Correct.
Yep.
And most of those things end up working, or at least enough of them work that it's a great deal, right? And so the idea is that we don't need to invest in everything that's going to do well. We can't. That's not going to happen. But what is very important in investing is that you have to have strong conviction, the aha moments, which make it complete no-brainers. For me, Tesla is not a no-brainer, nowhere close to it. Bitcoin is not a no-brainer, nowhere close to it. If I'm wrong on Bitcoin or if I'm right on Bitcoin, it doesn't matter.
Doesn't matter.
Okay. What matters is, am I right or wrong on the turkey bet?
Right.
Am I right or wrong on, some on Micron, for example, that I own?
Yeah.
That matters. Okay. Whether I'm right or wrong on that matters. And so conviction is very important. No call strikes can get a lot. So if things even modestly don't make sense to you, take a pass.
Right.
And for those out there who are understanding this, when he says no called strikes, Buffett talks about you can set the plate and just wait and wait and wait. And every pitch comes to you and you only swing when you have strong conviction saying, this is a $20 million company that generates $30 to $40 million in free cash flow. The real estate's worth $1 billion, net of $200 million in debt, $800 million. That's what you're sitting there saying. You're going to swing away on that.
Yeah, and baseball is such a hard game. They only give you 3 strikes.
Yeah.
Investing is so awesome. You can have 3 million strikes, still be at the plate.
So, and your $750
Still
million that you have invested between all your funds, how many positions do you have? How many holdings do you have?
I think by the time you get to a 5th position, you would be looking at like 70, 80% of assets.
Okay.
Wow.
So that third of you own a third of the company. Okay. Gotcha.
Paul's opened my eyes to a lot of things as I've learned. And in your book, Dondo Investor, you talk about making such obvious investments that it's tails I win, heads I win, tails I don't lose much. We find with a lot of people that follow us is the idea of downside risk and minimizing that is not something that young folks and new investors really have on their minds. What is, I guess, summing up all of you said today, like, what kind of mindset do you have that someone watching this video, a new investor, could take as like a top mindset to have, like investing, managing the downside risk?
The thing that's difficult from a psychological perspective is watching your idiot neighbor get wealthy.
It's very true.
Okay. So
Or his son get wealthy, who's 17 years old.
Yeah, exactly. And so that's what gets bubbles going. And there's a great book, actually. It was written by Ron Insana. He was a anchor at CNBC.
Yeah.
It's called Trend Watching. And if you read Trend Watching, you will see that bubbles are they're there all the time. I talked about the 1920s, 1960s, 2000, and now these are big bubbles. Okay. But there's bubbles all the time in all different geographies. things get euphoric, things get pessimistic. It's just the nature of humans. It's psychologically very hard for most humans to defer gratification, you know, and, you know, buying something which is not, you know, things that you can talk to your friends about or do kumbayas with them and so on feels difficult. If you own 10 cent, no, not 10 cent, but if you own Bitcoin or Tesla, you feel like you're part of the tribe.
Yeah.
And there's enough, like I said, the kernel of truth is there. There's enough kernel of truth that you can wrap all kinds of things around that. And so then you will, you know, what happens in the echo chambers that most of us live in is that echo gets multiplied, you know, with all these different message boards and all of that. You know, you're getting an amplification of the signals you want to learn. And we saw the same thing in the political process, right? You get amplification of views, whether they are correct or not. You just get a big amplification.
Right.
So that's what creates distortions. But I think for the patient value investor, it's the only way we actually make money is when things go crazy in other places and some areas get ignored. Yeah. So we wouldn't be able to do our craft if we didn't have bubbles happening.
You know, and that's something we talk about a lot. It's the last 10 years, that's been my shift. But I always joke with people and say, I feel like I'm so contrarian that if somebody told me the sky was blue, I'd be like, it can't be blue if the public thinks that. But your friend Guy Spear wrote The Education of a Value Investor. And that one of the interesting parts that I liked in it was, you know, he had this analyst in 2008 who was a value analyst. He had that person in the fund, his friend in the fund, who was a value, and then they sold because they couldn't stand the heat. And I think for me, one of the most, and I shouldn't get frustrated by it, but one of the hardest part is, all these young people are in a new market. I mean, my brother is graduated from high school in 2007. He graduated from college in 2011. He's never seen a bear market. Oh. I mean, he saw COVID last year. That's COVID. That was it. He literally believes this market's never going down. But not in a way of, he thinks we're wrong, in a way of like, what is going on here? Like, how are these justified? You know, this doesn't make sense. But he doesn't believe anything's going down. And it's funny because we all have other friends who say, oh, I can stand 50% loss. I'm like, okay, I understand you say that. But
they say that, but even during the pullback, we were getting furious texts about calm us down. What is going on here?
I'm like, okay, well,
is it going to zero?
I mean, look at Alibaba; it's fallen.
And and you know, humans have a 17-year history. Yeah, they cannot remember things beyond 17 years. So
John Galbraith says 4 years.
Yeah,
doesn't he say 4 years in the financial memory?
Yeah,
but go ahead.
But 17 years is about the range because the market participants who have come in, like a lot of the market participants currently weren't around during the .com bubble.
Right.
They never saw that.
Yeah.
And they think of those things as some historic different time.
Dinosaur age.
And we have never seen before this meme phenomena. You know, like the thing is that you take to me, the most obvious candidate for shorting, which I'm always against shorting, how could you lose a short against GameStop? It's so hard to lose. Okay, now when you had this frenzy going on with all these people going and buying more and more GameStop, they took out the sane shorts of GameStop.
Yep.
You know, they caused them a serious amount of pain. And it's another reason why shorting doesn't make any sense. But what I'm saying is that I could not figure out, other than GameStop issuing shares at the elevated price, it's a useless business.
Yeah.
Okay. They don't have real estate. They have leases. They have a huge terminal liability on space which doesn't produce profit. Okay. The space is used to sell video games which you can download. You don't need a space in a mall to go and buy your video games. Okay. So it's the most dumbass business model. Okay. I mean, AMC, you can even try and say, well, maybe people after COVID will go back to the theater.
I like going to theater, by the way.
I mean, I think we will see a change. I think theater traffic will go down secularly after COVID. The people will still go to the theater, but not the way they used to.
Of course not.
I think we've had a lot of changes with COVID. But GameStop, I mean, they bring in those couple of people, and they talk mumbo jumbo, saying we're not talking about our strategy because we don't want to reveal our hand. They have no strategy. Okay, the only strategy that makes sense is issue a lot of stock at the high price, and that's the only way you can make that stock worth that number. And that's about it. And if you really wanted to game the system, issue a lot of stock at the high price and then put it all into Bitcoin. And then you can really run that engine all the way.
You're just so negative, Mohnish. You're just such a negative person. And that's the thing.
But I think it's sad because I think a bunch of people in the end will be hurt.
And who are the people that are going to be hurt?
Pretty badly.
And who are the people going to be hurt? It's going to be the average people.
Yeah, it is.
That's the sad part about the whole thing is like,
people that don't want to see their neighbor making money without them.
Yeah, and then they're going to blame somebody saying, oh, it's Rich Wall Street that did it. Maybe it is. I mean, I don't like Wall Street, not as much as, the anti-Wall Street people, but I look at it saying it's these average people. The example I always give is I played golf last summer on a golf course, and the 17-year-old caddy told me I didn't get Bitcoin or Tesla or Palantir. I said, well, there you go. And the joke is among the guys I was playing with, they still say, you should go ask him for advice because he obviously knows a lot more than you. And they make it as a joke, but I'm like, listen, to me, I know talk about the past, I don't know enough about it. It's too hard. I look at it as, to me, it's too, I shouldn't say that because it's not too obvious. It's just, I look at too hard and overvalued as, like, I look at it this way. Microsoft, you guys have it in the too hard pile. If Microsoft was selling for 1/10 what it's selling for today, is it too hard?
No.
So that's why I don't buy in the too hard thing. To me, it's the overpriced pile.
Yeah,
because I can understand the business, I just can't understand the valuation. So the valuation doesn't.
That's right. Okay, you can have two piles.
Yeah,
overvalued and too hard.
Too hard to me is Bitcoin, because I literally don't know about Bitcoin. Going, I really have no idea what's going on with Bitcoin. I have no idea what the use will be. I just don't get it. And that's too hard for me. If Bitcoin was $1,000 of Bitcoin, I would have no idea.
Yeah.
That to me is the too hard. And I'm not trying to get into semantics, but when I tell people out there, like, I avoid Bitcoin because I'm like, I don't understand Bitcoin at 100, Bitcoin at 1,000, Bitcoin at 10,000, Bitcoin at 1,000,000. I don't understand it any way you cut it. Microsoft, I would sell my soul. I would rob you, and I would do everything possible to get money to buy Miecosoft at $3 to $30 a share. I would literally steal from everybody I could possibly imagine to buy Microsoft at $30 a share.
Sure. That'd be a great investment.
Would you help me hold people up and rob people?
I might not go that far. Even though I like you a lot.
Do you like me a lot?
I like you a lot.
Thank you very much.
Okay, we'll close with that. Mohnish, thanks for joining us. We'd love to have you on again in the future. Our fans really enjoy you. They've read the Richer, Wiser, Happier. We've been telling them about your book and Richer, Wiser, Happier for a long time.
Yeah,
let's get these 2 books here. And if you ever write another book, you planning another book?
Not yet.
Okay, well, if you ever do, we have 111,000 subscribers now. By the time you write it, we'll probably have 1 million. So we'd love to have you on to promote your book.
All right, that sounds great.
Great.
Well, I think you guys are really doing God's work.
Oh, God's work.
Yeah, you're doing God's work because I think you're helping getting some good messaging out to people where it would be helpful.
I appreciate that.
Thank you very much.
So that's wonderful. Thank you.
By the way, do I give you the resume or do I give it to Kim? Because I kind of need a job. My stock investments have not been working out very well.
If you two fall
Either
through.
one will work.
Okay. All right, that's our show, guys. Thank you, Mohnish, for coming on. It was a pleasure.
Mohnish.
I've been really I've been dreaming of this talk for many weeks now, many months. So it went flawlessly, I think, and as I stumbled through. So thank you for coming on, and we'll have you on again. Thanks.
The reason we created the software was exactly for this, because people watch the videos, want to do their own analysis when they see me do this. So we created the software so people could do this. You get everything you see here on the Everything Money channel, on the Everything Money page, all our tools, plus all the ones coming up. You get over 30 years of financial data. You get access to Seth Mo and I. You get all the 8-pillar analysis, that stock analyzer tool, real estate calculator, retirement calculator, 8-pillar portfolio. We can put in 50 stocks at once. And it tells you how they all look as a portfolio. All of this plus exclusive daily content. We have 1, 2, 3 videos a day that we release only to our users of our software. You get it all in mobile form. All of this is available on your mobile app, all for only 90 cents per day. 90 cents per day. If you can increase your returns or decrease your losses by 1 or 2% a year, that could lead to hundreds of thousands, probably even millions of dollars in extra net worth for only 90 cents a day. 2 ways to sign up, everythingmoney.com or Patreon. The benefit of everythingmoney.com directly is you don't pay sales tax yet because we're not big enough. So sign up, only 90 cents a day. This is a no-brainer, less than a cup of coffee.